Hello students, few days back we have given you the model question paper for BCU students, right, as per NEP. So we would like to get you answer for that model question paper, alright. So once again I request those who have not subscribed for this channel, kindly subscribe and share among your friends, right. And we have worked out all the problems. I have written all the answers for all the questions. But in any problem, if you have any clerical error, you please rectify yourself, right? Otherwise, the all systems, it is perfect, right? So let us have that what actually the answers. The BCU as per NP section A, answer any 5, but you have answer all the questions. Mention any 2 objectives of accounting to give meaningful and accurate information about the financial activities of the business, to keep the records in a systematic manner, to measure the profit or loss for knowing the performance of the business, to ascertain the financial position of the business, to provide financial information to internal users. Yes, say it is called as, what do you mean by, you are giving the whole system of what actually accounting, because say it gives you meaningful and accurate, as well as what actually it must be in systematic manner, and we would like to know what actually profit or loss of our business what we are doing, and also we would like to know financial position, that is called as our assets and liabilities, and also to provide information for internal users, for your debtors, creditors, everybody, that we would like to know where it is. So that is why these are the objectives they have written. They have asked 2 objectives. You can write, I have written everything. You can select any 2. Mention any 2 accounting concepts. There are so many. I hope you know that accounting concepts and conventions, right? Say without concept you cannot do anything. Money measurement concept, then business entity concept, going concern concept, cost concept, dual aspect concept, accounting period concept, matching concept, accrual concept. Say you can say that several concepts are there. Without that, say whatever the transaction you do, there must be money. So without money, there is no transaction, right? Business entity, you are individually different and from the business point of view different. So that is called as business entity. That means you have special what actually identity. Going concern, that means it is there continuous, right? That is called as going concern. Cost concept, yes, whatever you do that cost, because we would like to see that profit or loss, right? We should have that cost must be there. Dual aspect, for every debit there should be a corresponding credit. Then accounting period, usually it is from 1st of April to what actually 31st of March, accounting period concept. Matching, for every debit or credit, for assets and liabilities, assets must be equal to what actually liability. Accrual, which is called as what you mean by outstanding, everything cannot be paid in that only, where it will be accrued. So these are what you call the 2 they have asked, but I have given you brief explanation also for that. Bring out the difference between manufacturing accounts and trading and profit and loss account. The manufacturing account is prepared to determine the cost of the product, whereas trading and profit and loss account is preparing trading and profit and loss to determine gross profit or gross loss and net profit or net loss. So here only to find out the cost. Here you have trading account and profit account. Trading account is prepared to find out gross profit or gross loss, whereas the profit and loss account is prepared to find out net profit or net loss. That is the difference between the manufacturing account and what actually trading and profit and loss account. Give the meaning of del credere commission. Del credere commission refers to the commission paid to the consignee when he is responsible for bad debts incurred out of credit sales made by consignee. So it is very simple. One is normal commission, the other one is del credere commission. Del credere commission is the responsibility of the bad debt has been taken by the consignee, right? Then in such a case, he demands extra what actually commission for that. That commission is called as del credere commission. Next. Bring out any two differences between royalty and rent. Royalty is a consideration payable for the use of special right for both tangible and intangible assets. Measurable and not exactly measurable is called as tangible and intangible asset. Rent is the consideration payable for the use of only tangible assets, that is measurable assets, right? So that is a difference. Royalty, say tangible and intangible is royalty, only tangible is rent. Royalty is paid either on the basis of output or sale. Rent is paid on the basis of period. Royalty varies on the basis of output or sale. Rent is what actually fixed. Here it what actually varies. If output increases, royalty increases. Output decreases, royalty decreases. Whereas here it is rent is what actually fixed. So that is the difference between royalty and rent. Give the meaning of cloud computing. Cloud computing is a paradigm that focuses on sharing data and computations over a scalable network of nodes, that is from the branch, we'll call it as what actually, including end user computers, data centers and web services. It seems like such a network of nodes as a cloud. I think now it has become so popular. Everyone would like to go for a cloud computing, especially in CA offices. They would like to have. Why? They'll go for cloud computing, so it can be downloaded at any point after anywhere, so that the auditing can be done very easily. So that is called as what I call cloud computing. Mention any two objectives of green accounting. So that means wastage of paper should be what actually avoided, right? Then it is called as eco, which is called as what green accounting. To identify that part of the gross domestic product that reflects cost necessary to compensate for the negative impact of economic growth, that is defensive expenditures, right? To establish the linkage of a physical resources accounts with monetary environmental accounts is called as what I mean by here. The first one, which is called as the green accounting, the objective. Now section B. Answer any 4 questions, but we have answered all the questions, right? Mention any 5 Ind AS. I have given you so many Ind AS. You can write Ind AS 41 regarding agriculture, Ind AS 40 investment property, AS 38 intangible assets, AS 37 provisions, contingent liabilities and contingent asset. What is contingent? It may become or may not, is called as what actually contingent, right? Intangible, it is not exactly measurable. Investment, you know that you are going to invest outside anywhere. Agriculture, I need not tell. Then AS 36 impairment of accounts, AS 34 interim financial reporting, AS 33 earnings per share, which is called as EPS. So you can write any 4 where I have given you more than 4. Now, problem number 3, right, in section B. Prepare a trading account of Mr. P for the year ending 31st March 2021 from the following particulars. Purchase of materials 2,50,000, carriage and purchases 6,000, wages 70,000, stock of goods on 1/4/2020, it is opening stock 3,60,000, stock of goods on 31/3/2021, it is closing stock. Sales 6,50,000, sales returns 80,000, purchase returns 30,000, duty and clearing charges 70,000, factory rent and lighting expenses 30,000, factory salaries 20,000. Now trading account, it should be in the form of vertical form, because you have your syllabus, it is vertical form final accounts, not what actually the T shape. So you have to remember, it is very simple. You are doing in the T shape, particularly to opening stock, to purchases, less return by sales, returns by closing stock, to all direct expenses, finding out gross profit or gross loss. The similar thing, we are not going to do it in T shape, we are going to do it in vertical format. How it will be? So I have worked out the problem. Here it is. Trading account of Mr. P for the year ending 31/3/2021. Particulars. Note, if you are doing any adjustment, then you have to say that 1, 2, 3, 4, 5. That is note 1, note 2. Then amount, inner column, outer column. Net sales. Sales is how much actually? 6,50,000. and sales return is 80,000. 6,50,000 minus 80,000. Why? I have written net sales. Net sales means from the total sales minus the returns, it is called as net sales, 5,70,000. Less cost of goods sold. So cost of goods sold, what is the expenditure incurred for that, right? Opening stock 3,60,000. Net purchases, say here once again I will show you, purchases material is 2,50,000, purchase returns is 30,000. So 2,50,000 minus 30, it comes to 2,20,000. Carriage inwards, it is 6,000. That is carriage inwards means what actually? That is carriage on purchases. Carriage on purchases and carriage inwards are one and the same. They are different names. We can say that it is, you say that on purchases for your references. Purchases. Then wages 70,000, duty and clearing charges 70,000, factory salaries 20,000, factory rent and lighting. It is factory, you must very careful. Factory means it is direct. If it is office means what actually? Indirect. So office means it appears under profit and loss account, factory means it appears under trading account. So factory salaries, factory rent and lighting expenses 30,000. So all this comes to how much actually? 7,70,000. But you have a closing stock. Out of this closing stock is how much actually? 3,80,000 minus. Then the cost of goods sold is how much actually? 3,96,000. So out of 5,70,000, if you minus 3,96,000, you will get gross profit of 1,74,000. If cost of goods sold is more than net sales, then it is called as what actually? Gross loss. This is how you have to do what actually? Your trading account in the vertical form. Now problem number 4. Calculate the value of abnormal loss and the value of closing stock from the following information. Right? So goods sent on consignment 400 units of glassware at rupees 100 per unit. Expenses incurred by consignor rupees 2,000. Goods lost in transit 20 units. Expenses incurred by consignee, tax 1,420 and selling expenses 1,000. Goods sold by the consignee 340 units. Goods damaged at the consignment place 2% of the total goods consigned, which is permissible. So it is permissible means it is very simple. That means you can take it as normal, right? So permissible, that means it happens in the transit, some percentage of goods that you are going to lose because it is a glassware. Then how to work it out? It is very simple. I have written calculation of normal loss bar abnormal loss bar what actually? Closing stock. Everything you can find it out in one statement. Goods sent on consignment, that is 400 units of glassware at rupees 100. So 400 into 100, it comes to how much actually? 40,000 units is how much actually? 400. Add non-recurring expenses. What is non-recurring expenses? The expenses which is not going to repeat is called as what actually? Non-recurring expenses. So non-recurring expenses of consignor is how much actually? 2,000. So cost of goods in transit is 40,000 plus 2,000, it comes to 42,000. That is for 400. Less normal loss in transit. Say they have given in the problem that is goods lost in transit is how much actually? 20. So I have written that is normal loss in transit 20. Abnormal loss has not been given. So cost of goods received by the consignee, that is 42,400 minus 20, then it comes to 380. Now we are not supposed to enter only the non-recurring expenses of consignor. We are supposed to enter the non-recurring expense of consignee also. Add non-recurring expenses of consignee, tax 1,450, selling expenses 1,000. So total it comes to 44,420, then 80, that is 380 is what actually? Units. Less normal loss at go down, that is permissible. They have given in the problem 2% of the total goods consigned, which is permissible. That means you cannot what actually save such things. That means it is out of hands. It normally happens, right? So normal loss at go down permitted at 2% of 400. How much it is? 400. 2% is 8. So goods available for sale is 44,420. It is 372. Now the sales is how much? That is very simple. They have sold only how much at least 340. That means how much closing stock is there in units is 32,000. Now, I'm sorry, 32 units. For this 32 units, I have to calculate what is the value of this stock. It is very simple way. Don't use any formula, any use formula. So you say that for 372, what is the cost that you have incurred? That is 44,420, right? For 32 units, it is how much? Very simple. So for 372 units, cost is 44,420. For 32 units, it is how much? 44,420 into 32 divided by 372. It is 3,821. We have written for 32, it is 3,821. This is all we have to do it for section B, that is under consignment. This is problem number 4. Yes. Now, problem number 5. Prepare an analysis table from the following details, assuming that short workings are recouped in the first 3 years. First 3 years only. If it is not recouped, then it will be transferred to profit and loss account. Royalty payable is rupees 4 per ton of output. Minimum rent is rupees 70,000 per annum. The details are 2018 10,000 tons, 2019 17,500 tons, 2020 25,000 tons, 2021 30,000 tons. Right? Then you have to prepare what actually analysis table. Right? Very simple. Here it is given what is this one. Royalties payable is 4 rupees. Minimum rent is how much? 70,000. Very easy to prepare. Analysis table. Year, output in tons, minimum rent, royalty at rupees 4 per ton, SW, I have written it is short working, SWR, short working recouped, or SWR, short working recouped, SWNR, short working not recouped or not recovered. It is called as irrecoverable. This irrecoverable automatically will be transferred to profit and loss account. So 2018 10,000 tons, 19 17,500 tons, 20 25,000 tons, 21 30,000 tons. Minimum rent always it will be one and the same, 70,000 70,000 70,000. 10,000 into 4 rupees 40,000, 17,500 into 4 rupees 70,000, 25,000 into 4 is 1 lakh, 30,000 into 4 is 1 lakh 20. Where minimum rent is 70,000 whereas royalty is 40,000, that means your minimum rent is more than royalty. So for that you have a loss of how much actually 30,000. It is called as short working dash dash, but you have to pay to the landlord how much? 70,000 minimum rent. If you would have been 80,000, we would have paid 80,000. But here 70,000 is more than 40,000. Royalty earned is only 40,000. Next year 70,000 70,000. That means both minimum rent and royalty is one and the same, 70 finished. Next 70,000 is minimum rent whereas royalty earned is how much actually? 1 lakh. That means you have excess royalty of 30,000, where in the problem they have given that short workings are recouped in the first 3 years only. I hope 1, 2, 3. Now in the third year. So the third year it is what actually 30,000 is there. That means short working 30,000 here and we have recouped 30,000. No short working not recouped. So amount payable to landlord is how much actually? 70,000. Next year that is 30,000 whereas minimum rent 70,000 but royalty is how much actually? 1,20,000. Now nothing can be recovered because we have already recovered. So 1,20,000 dash dash and pay that amount to 1,20,000 to the landlord. That is called as, what do you mean by you have to prepare in the similar fashion for all problems when you get royalty. That is 8 columns, 1, 2, 3, 4, 5, 6, 7, 8. That is year, output, minimum rent, whatever it is. It output or sales, turnover, whatever it has been given, right? On which term that they are going to pay royalty. Royalty, short working, SWR short working, Recouped, SWNR, short working not recouped, and amount payable to whom? Amount payable to the landlord. So this is how you have to prepare. Mention the methods of valuation of human resource and explain one of them in brief. 1. Historical cost method, replacement cost method, economic value method, standard cost method, present value method, current purchase power method, opportunity cost method. We have given so many methods. That is, all the methods has been how we are going to value human resource, right? Human resource plays the vital role as on today, right? So, historical cost method. Human resources are valued at the unexpired portion of the cost of recruiting, training, and development of employees. This is very simple and meets the test of traditional principles of accounting. This method cannot fulfill the requirement of developing a system of HRA, right? Human resource accounting based on systematic valuation of internal as well as external human resources. So what all the costs that we have incurred for that person, that we are going to get back, which is called as what actually? Yeah, one which is called as historical. Then the other one is what actually that I have explained you, replacement cost method. The method of this method requires an estimation of cost of replacing the existing personnel under existing organizational condition. The underlying cost include the cost of recruitment, training, development, the opportunity cost during the intervening period till the new recruit attains effectively level of old employee. That means you are going to replace it. You are not going to use the same one. Alright. So in that case, how you are going to value, right? The difficulty in this method is to find out identical replacement for the existing human resources in the actual practice. It is not so easy to replace, right? So for that sake, but that is one of the methods where you can have what actually your valuation, human resource valuation, right? So I have explained two, you can explain any more, right? Now section C. From the following trial balance of Mr. N, prepare the final accounts for the year ended 31st March 2021 and the balance sheet as a date. It is implied that you have to do it under vertical method only, everything, right? That means final accounts means it is trading and profit loss account as well as what actually balance sheet in the vertical column, not what actually under T shape, right? That is not on horizontal. Land and building 50,000, purchases 1,10,000, stock 40,000, returns 1,500. In the book where I picked the problem, it was a wrong amount was given in the problem. It is not 500. I have written 2,500. Students, what you have to do? In this problem, they have not given the total of the trial balance. So better, even if they have given the total, please check the total before you start working out the problem. You please check the total. That is what I did it. When I did the total, then there was a difference of 2,000 rupees in the trial balance. Then I came to know that that is returns 1,500. It is 500, 2,500. But I have made it to that. Then in the examination, what you have to do is, if any difference in the trial balance, you write the difference in trial balance only. Don't write. Don't think, hesitate. You write only difference in trial balance, right? Wages 10,000, salaries 9,000, office expenses 2,400, carriage inwards 1,200, carriage outwards 2,000, discount 750, 1,200. 750 is allowed, 1,200 is received. Bad debts 1,200. I hope you know the items where all it appears. I hope land and building which appears as asset, purchases it appears under trading account, stock means opening stock appears under trading account, returns 1,500 debit means it is purchase returns, 2,000 credit means it is sales. This is purchase returns, this is sales returns. Then wages 10,000 trading account, salaries 9,000, that is profit and loss account, office expenses profit and loss account, carriage inwards trading account, carriage outwards profit and loss account, discount allowed profit and loss account, discount received is also profit and loss account, bad debts Once again, profit and loss account. Capital sales 2,05,000, that is trading account. Capital account 1,30,000, liability. Insurance means it is insurance premium. Always we should say it is insurance, means insurance premium. It is implied concept. 1,500, profit and loss account. Commission, it is showing credit, that means received. It comes under profit and loss account. Plant machinery 50,000, it is asset. Furniture and fixtures 10,000, asset. Bills receivable, it current asset, right? Sundry debtors, current assets 40,000. Sundry creditors, current liabilities, how much actually? 25,000. Cash in hand 1,500. Cash at bank 4,500. Office equipment, cash in hand, cash at bank, it both is current asset. Office equipment, it is fixed asset, that is 12,000. Bills payable, liabilities, that is 2,050. I will have written that what actually 3,67,550, 3,65,350. That means there was a difference of 2,000 that I have adjusted towards what actually the returns. So your intention is in the examination, when you take up the paper, if trial balance is given, if total whether it has been given or not, better you total it by yourself. I did not write anything because in the degree you are not supposed to mark anything in the question paper, right? If you mark the question paper, then it is a crime. So you are not supposed to. That's why I just say that what actually asset, liability, profit and loss account, trading account, just I told you like that. While working out, you can easily follow and write it in your book, but don't write anything in the examination. Then what are the adjustments? The following adjustments are required. Closing stock amounted to be 60,000. So what happens in closing stock, which appears on trading account as well as which appears under the asset side of the balance sheet. Outstanding liabilities, wages 2,000 and rent rupees 3,000. So if you are very keen, wages is there, but there is no rent. That means he has not paid the rent for the whole year. That means you have to pay that for 3,000 as outstanding in profit and loss account. Depreciate land and building at 5% and plant and machinery at 10%. Office equipment and furniture fixtures at 10%. Raise a bad and doubtful debts reserve at 5% on sundry debtors, right? Insurance premium prepaid, that means paid in advance, always it is an asset. So minus insurance premium to that extent 200 and take this 200 in the asset side. Provide interest on capital at 5%. So these are the things. I have worked out the problem here neatly for your reference, right? Net sales I have already told you, you are supposed to minus what actually the returns, right? 2,05,000 minus 1,500, then it comes to 2,03,500. Less cost of goods sold, opening stock, net purchases minus what actually the returns 1,07,500, carriage inwards 1,200, then wages 10,000 plus outstanding 2,000, then it comes to 12,000. Then take out the closing stock, then you will get cost of goods sold 1,07,000. Then from that minus you will get gross profit 1,02,800. Then take all expenses except selling and distribution expenses, that should be shown separately as per the act, that is as per the vertical system. So salaries, office expenses, insurance premium 1,500 minus 200 prepaid 1,300. Outstanding rent, I told you rent itself has become full, rent is outstanding 3,000. Depreciation on building 2,500. Depreciation plant and machinery 5,000. Depreciation on office equipment 1,200. Depreciation on furniture and fixtures 1,000. Selling and distribution expenses I have taken carefully. The items which belongs to sales, that should be taken separately. Carriage outwards 2,000. Carriage inwards will appear under, that is direct, it appears under cost of goods sold. Carriage outwards comes under what actually? Selling and distribution 750. Bad debts 1,200. Add a new reserve. So they have given one more thing here in the problem. Raise a bad and doubtful debt reserve at 5% on sundry debtors. So 5%, 1,200 plus 2,000, it comes to 3,200. Then minus, you will get 71,450. It is not the end of it. Still you have thing. What is that? Continued. That is 71,450. Add add operating income, discount received 1200, commission received 1500. These are all what actually operating. That means in the business, discount receivable, discount payable, commission receivable, commission payable, all are operating. So then if you add that one, it comes to 74,150. Add non-operating incomes. This is operating, this is non-operating. Nothing has been given regarding non-operating. Assuming that you have received what you call dividend on investment. It is not an operating income. It is called as directly non-operating income. Right? Then next, less non-operating expenses. What is non-operating expenses? Interest on capital is not an operating, it is non-operating expense. 5% of 1,30,000 minus 6,500. The net profit transferred to capital account is 67,650. This is what actually profit and loss account. Now you have to prepare balance sheet. Everything is here, very simple, right? Balance sheet as on 31/3/2021. Capital 1,30,000. If you have a doubt here, 10, if you are not able to see, I will write it here. 1,30,000. Add net profit 67,750. Add interest on capital 6,500. Then it comes to 2,04,150. Then liabilities. Under that, first non-current liabilities. Current liabilities are different from non-current liabilities. Non-current liabilities usually secured loan or unsecured loan. Nothing has been given the problem. You say dash or you say nil. It is one and the same. Then current liabilities. Creditors 25,000, bills payable 2,350, outstanding wages 2,000, outstanding rent 3,000, then 32,350. The liability is total 2,36,500. It is vertical. First we have to do what actually liabilities, then asset. So under asset, non-current asset, right? Under non-current asset, it is fixed assets. Land and building 50,000 minus depreciation 2,500, 47,500. Plant machinery 50,000 minus 5,000, it is 45,000. Furniture and fixed fittings 10,000 minus 1,000, it is 9,000. Office equipment 12,000 minus 1,200, 10,800. So total fixed assets is 1,12,300. You do not have investments, right? Investments nil. Next, current assets. Current assets. Closing stock 60,000. Debtors 40,000 minus 2,000. You have raised further doubtful debt. For 40 minus 2,000, 38,000. Bills receivable 20,000. Prepaid insurance, which has been deducted from 1,500 rupees 200. So prepaid insurance is an asset 200. Cash in hand 1,500. Cash at bank 4,500. If you add, the current assets is 1,24,200. If you add this, then you will get 2,36,500. 2,36,500. Balance sheet automatically tallies. This is how we have to do vertical system of final accounts. Now problem number 8. Messrs. S and Company consigned 1,500 tins costing rupees 600 per tin to their agent M Stores at Kolkata. The tins were invoiced at a pro forma price of rupees 800 per tin. It is 600, it is 800. That means 200 rupees is directly profit per tin. The agent sold 900 tins at rupees 810 per tin for cash, 400 tins at 850 on credit. So you should be very careful. He has sold the goods on two systems. One is cash, the other one is credit. So what is total sales means cash plus credit. That means you have to calculate the total sales, right? The S and Company paid 5,000 as freight and rupees 2,000 as insurance. That is called as non-recurring expenses. They drew a bill on M Stores at 3 months for rupees 6 lakhs, which was duly accepted by the latter, right? That is bills of exchange. They have accepted. Instead of giving cash, they have drawn a bill. The expenses incurred by the M stores were carriage rupees 500, octroi 1500 and storage rent 1100. They were entitled to a 5% commission and 2% del credere commission. What is del credere commission? Del credere commission is the one who takes the responsibility of bad debts. Is called as del credere commission, because here he has sold the goods on credit sales also. When he has sold the goods on credit, then bad debts may come or may not. For that, he will be given extra commission. That is his responsibility. That is consignee's responsibility on the total sales. They sent their account sales to their principal, showing as a deduction there from their commission and the various expenses incurred by them. Prepare necessary ledger accounts in the books of Messrs. S and Company. Students have given you a lengthy problem. It's only one thing is you may have less adjustment, but I have given you everything so that you can learn from the point of examination, right? So first I have written calculation of closing stock. Closing stock. Goods sent on consignment 1500 into 8, that is 1500 units, it comes to 12 lakh. Add non-recurring expenses of consignor, right? Freight 5000, insurance 2000, total comes to 7000. So goods in transit at cost 1500, then it comes to 12 lakh 7000. Add non-recurring expenses of consignee, carriage 500, octroi 1500. I have not taken rent because rent is not a non-recurring expense, it is a recurring expense. So 500 plus 1500, then it comes to 2000. So for 1500, it comes to how much? 12 lakh 9000. Sales, he has sold 900 plus 400, it is how much? Actually 1300. Just I will show you. That is, he has sold 900 tins and 400 tins. 900 for plus 400, that comes to 1300. So how much is remaining? 200. What is the cost? That I have put a question mark. That means you have to find out the closing stock. For 1500 units, the expenses is 12 lakh 9000. For 200 units, it is how much? So 12 lakh 9000 into 200 divided by 1500, it comes to how much? Actually 1 lakh 61,200. So the closing stock value is 1 lakh 61,000. How much? Actually 200. So that we have calculated. Now I have shown you the important other calculations. Invoice price is how much? Actually 800. What is the cost price? 600. Profit is how much? Actually 200. I have already told you. For 600 cost, profit is how much? Actually 200. For 100 is how much? Means it is 33 1/3%. That means 33 1/3% on cost. It can be calculated other way also. That is, for 800 rupees. For 800 rupees, profit is how much? Actually 200. For 100, it is how much? It is 25%. For that sake, I have given you here 33 1/3% on cost is equal to 25% on sales. It is one and the same. Students can do it in any way in both the methods. That is, answer is one and the same. Whether you 33% on cost or 25% on sales, it is one and the same. Goods sent on consignment, stock reserve, 25% of 1 lakh, that is 12 lakh, it is 1500, it comes to 12 lakh. 25% of 12 lakh is how much? Actually 3 lakh. Stock reserve on unsold stock. Here it is a lengthy calculation is there, but I have shown you very simple one line calculation how to find out stock reserve of unsold stock, right? Price of unsold stock is equal to cost of goods consigned into number of units unsold stock divided by number of units consigned. 9 lakhs, that is 12 lakh minus 3 lakh, it comes to 9 lakh into 200 divided by 1500 is equal to 1 lakh 20. Then stock reserve, price of unsold stock into percentage of profit, that is 1 lakh 20,000 into 33 1/3% is equal to 40,000. So lengthy, so lengthy. You can do it in one line. You can say this is what you call in the books they do. Where it can be done in a very easy method, I have shown you here. Very easy method. What is the total out of 12 lakh? Out of 12 lakh, that is 9 lakh is there. Remaining unsold is how much? Actually, that is 3 lakh. Very simple, right? 3 lakh, which I have already calculated. I have shown you that 3 lakh here. I have shown you this 3 lakh here. I hope you can see that 3 lakh. You take this, what actually 3 lakh, right? So this 3 lakh, total how much goods that you have, so actually send 1500. How much is remaining? 200. Then what I have to do is, for 1500, it is 3 lakh. For 200, it is how much? That is stock reserve calculation is very simple. 3 lakh into 200 divided by 1500 is equal to 40,000. Here I have done so much of calculation. Here in just one line I have shown you how to do what actually the calculation. It is 40,000. So you can follow this method. It is very easy and highly traditional method earlier what we were doing. So total sales is equal to cash sales plus credit sales. 900 into 10 plus 400 into 850. Why? This is what actually cash has been sold for 810, credit has been sold for 850. So 7 lakh 29 plus 3 lakh 40, total sales comes to 10 lakh 69,000. Ordinary commission, it is, that is 5% of 10 lakh 69,000 is 53,450. Del credere commission, total sales into percentage of commission, 10 lakh 69,000 into 2%, it comes to 21,380. So what is the total commission? 54,450 plus 21,380, total commission payable is 74,830. Now you have to prepare consignment account in the books of Messrs. S and Company. Very simple. Every calculation has been done. You just putting it in what actually account format. To goods sent on consignment, 1,500 into 800, that is 12 lakh. To bank account, consignors expenses, freight 5,000, insurance 2,000, it is 7,000. To M stores, that is the consignee expenses, carriage 500, octroi 1,500, storage rent. Here I have taken. For the calculation of closing stock, we are not supposed to take, but here we have to take rent because it is his expenses. So total 3,100. To M stores commission 53,450 ordinary. Del credere is how much actually? 21,380. Then by M stores sales is 10 lakh 69,000, we have already shown. By consignment stock account, we have already shown, that is 1,61,200, we have calculated. Goods sent on consignment, that is reserve, we have calculated 3 lakh. Likewise, this 3 lakh includes the other one, the stock reserve 40,000. I have showed you, very simple. 3 lakh into 200 divided by 1,500, then you will get 40,000. What is the profit or loss from the consignment is 2,05,270. 2,05,270. Now you have to prepare two more accounts. M stores account, that is to consignment sales, how much actually? 10 lakh 69,000. That is BR account, bills has been drawn 6 lakhs. Consignment commission 74,830, that is total. Then consignment expenses 3,100. The balance is 3,91,070. Then goods sent on consignment, by consignment account, that is invoice price 12 lakh. To consignment, that is load charges, how much actually? 3 lakh. Then the trading account, it will be transferred only how much actually? 9 lakh. So this is how you have to work out this problem under consignment. The special trick is, our new one is how to calculate stock reserve for unsold stock. Now problem number 9. Dr. S wrote a book on financial accounting and got it published with Himalaya Publishing House on the terms that royalties will be paid at rupees 5 per copy sold, 5 per copy sold, subject to a minimum rent of rupees 15,000 per annum, with a right of recoupment of short working over the first 4 years of royalty agreement. Over the recoupment short working for the first 4 years, right? First 4 years of royalty agreement. The details are as under. Year 2018, 2019, 2020, number of copies printed, number of copies in closing stock. You must be very careful. Number of copies sold. So you have printed 1,500 copies is in stock in that year is 100. That means how much you have sold? That is 100. Likewise, if you take 2000, you have printed 200 what actually is there, 1800 plus last year how much actually 100. So 1800 plus 100, then it comes to how much actually 1900. Likewise, you have to calculate the number of copies sold. That is the first step in this royalty. So 2020 3000, then 300 is in stock, then 2021 4000, then 400, 2022 5500. Prepare minimum rental account, royalties account, short working account and Dr. S account in the books of Himalaya Publishing House. So very simple, that is calculation of number of copies sold. I have told you number of copies sold is equal to opening stock plus number of copies printed minus closing stock. 2018 there was no opening stock because it has started. 1500 minus 100, it comes to 1400. Then 2008, 100 of last year it becomes closing stock of last year, it becomes opening stock. 100 plus 2000 minus 200, 1900. Then 200 plus 3000 minus 300, 2900. Then 300 plus 4000 minus 400, then it comes to 3900. 400 plus 5000, that is minus 500, it comes to 4100. That means he has sold 1400, 1900, 2900, 3900, 4900. Right? So what you have to do is you have to prepare the table of analysis. Table of analysis. Here output, royalty, minimum rent, short working recouped, short working not recouped, amount paid to landlord. I have told you in the previous what you call section B, you are supposed to have 8 columns. I have repeated SW, SWR, SWNR. Short working recouped, short working not recouped. So 1400, 1100, 2900, 3900, 4900. Royalty, it is very simple, it is 4 rupees has been given, that is, you can just see here in the problem, 5 rupees per copy sold, 5, 1400, you can say that rupees 5. So 1500 into 5, 7000, 9500, 14500, 19500, then 24500. Minimum rent in all the years is how much? 15,000. 7,000 is royalty, but minimum rent is 15,000. You have to pay 8,000. So 15,000 is payable again. You have a loss of 8,000. 9,500, where again you have a loss of 5,500. You have to pay 15,000. 14,500, 15,000. Again you have a loss of short working 500. Payable is 15,000. Then fourth year, last year, 19,500. Minimum rent is only 15,000. That means I can recoup how much actually? 4,500. Out of 8,000, I can recoup, that is 4,500, or out of 8,000, 5,500 plus 500, then it comes to how much actually? 14,000. Out of 14,000, I can recoup only 4,500. So how much I could not recoup, that is 9,500, it will be transferred to profit and loss account, that is short working not recouped. So payable amount is 15,000. Then last year it is 4,500. 24,500 is royalty, minimum rent is only 15,000, no question of recouping anything, even though you have more. As per the agreement, it is only 4 years. So the payable amount is 24,500. Now we have to prepare account. It is very simple and easy, right? I need not tell, every year the same entries that you are going to write. Seems to be problem is very big, but writing is very, very easy. That is minimum rent, right? By royalty 7,000, by short working 8,000. If you do the table perfectly, that you can just transfer it. Then Dr. S account how much actually? 15,000. 9,500, 5,500, it is 15,000, 15,000. 14,500, 500, 15. Once if you get royalty more than minimum rent, then minimum record you cannot record or you cannot continue, because now your royalty is more than minimum rent, right? Now royalty, that is minimum rent is 7,000, then it will be transferred to profit and loss account. Minimum rent is 9,500, then it will go to actually profit and loss account. Then that is 14,500 profit and loss account. Here you have recouped 4,500, then Dr. S account 15,000, profit and loss account 19,500. In last account, that is doctors, that is called as 24,500, 24,500. This adjustment can be done in two ways. One is through the debtors, that is the owner we can transfer, or you can transfer directly to a short working account. Both the methods are there. Don't get confused by yourself. It is one and the same, right? Next, short working account, right? To minimum rent 8,000, by balance carried down 8,000. Then it will be carried down to balance 8,000 to minimum rent next year is 5,500. Total it comes to how much? 13,500. Again carried 13,500. Again third year have a loss of 500. Then it comes to 14,000. Short working recouped is how much? 4,500, which we have transferred from there. That is 4,500. You can say it is called as short working account. That is called as recouped. That is 4,500. So profit and loss account, how much? 9,500. That means which you cannot recoup, it will be transferred to, that is profit and loss account. Then the owner account, Dr. S account, very simple. By minimum rent 15,000 to bank account 15,000. By minimum rent 15,000 to bank account 15,000. By minimum rent 15,000 to bank account 15,000. Royalties account 15,000 to bank account. Here also you can say what actually the royalty 15,000, then short working will actually 4,500, then you can say 19,500. You can adjust it, but don't worry, you try to do it there only straight away. So by royalties account 15,000 to bank account 15,000. By royalties account 24,500 to bank account 24,500. Automatically the problem is over. This is how we have to do what actually your royalty account. Students, if any clerical error is there, you adjust. 99.99% it is not there, but due to some short of time or oversight I might have, right? For that you need not worry, you just get it adjusted yourself, right? Any clerical error, right? No technical error, it is only clerical error. It may or may not be, right? Adjust yourself. Yes, students, now the last part, section D, skill development questions. Answer any one of the following questions carries 6 marks. Either it may be internal choice or it may be separate, right? That all depends in the examination, you can see. Bring out digital transformation impact on COVID-19 pandemic, right? So this is the recent trend, that is what I have given you, that is COVID-19, right? COVID-19 pandemic accelerated many aspects of digital transformation, as organizations across nearly all industries were forced to limit or even abandon in-person transactions with customers, employees, partners, suppliers, and virtualize as many interactions as possible. A survey released by the management consulting firm McKinsey and Company is October 2005 found an increased use of remote work and collaboration, advanced technologies in operations, and cloud computing as a result of the pandemic. Here are some of the ways in which the pandemic has had an impact on digital transformation. You know, the transformation means we were all worked on what actually offline. Now we have come online. Say even you have experienced your classes, right? You are not going to what actually college, where you are listening from your house, right? Sitting in what actually at one place of your house, or moving around and what actually learning everything through virtual. Why it happened? Because of COVID-19. Now the technology has been used to that extent, right? In almost, I think, work from home has become a biggest concept. For the industry also, it is what you call, they are getting so much of benefits that unnecessary expenditures that have what actually taken off. One plus point, the other one is minus point, right? So this is impact, but transformation has already taken place. That is what I said, just studied or read the first para. Say here the transformation, more use of customers friendly apps in wake of widespread lockdowns, more use of self-service apps to spend customers' data location, more use of advanced computer platform enabling the organization to modify supply chain to accommodate shifts in demand, increased use of AI in data analysis to analyze data and advanced commerce system, and evaluation of a chief information officer role from enable to a full-fledged partner in achieving business goals. So so many things has taken place, right? Don't think that you are supposed to write this only. Even you can write your own way, that is transformation, how it has taken place, right? So that is very important, how you will answer this question. Then I have given you one more question. For that, the second question, 10th question, prepare a pro forma invoice with imaginary figures, at least 6 items. I think you can just see that pro forma invoice, Mr. N books, phone number, new edition, consumer number, what is that address, right? You write the details of whatever it is details. I have given you only this thing. You can write anything that if you have any. Pro forma invoice is not a regular invoice. It is an invoice which is prepared earlier to your invoice. That means you are giving like a quotation, right? So these are the amounts and discount. Here it is package and carriages, everything. Then the total amount what is payable and signed by that person, right? So this is how you have to write what actually your pro forma invoice if they ask for it, right? They may ask, we don't know. Say we have imagined and we have given 2 questions. They may ask anything. Just go through with all skill development activities as per your syllabus, right? You may get any 2, right? So you can go through the whole thing, right? In the earlier also I have expressed, right? If any clerical error is, don't take it very seriously. You just see the how the things should be done, right? And how you should work out the problems, right? So I request those who have not again subscribe for this channel, kindly subscribe and share among your friends. I wish all my students to have the best paper, and I wish you all the best for your upcoming exams. Thank you.